Hey there, welcome back to another price action training lesson. We're looking at S&P 500 mini futures, the ES. The time frame is 2000 tick chart, which if you're trading a time-based chart is very similar to 1 minute chart. And the first thing I need to do when I'm trading, I need to analyze the structure. And today's lesson is going to cover the importance of understanding the market context. Right now, what I can see is that the prices are swinging consistently up and down through the exponential moving average, which is giving me an idea that this is most likely some form of a trend range. But in every trend ranges, there are biases. And this trend range is hinting me that I have series of lower highs. Every single high that's been made inside this trend range is lower than the previous one. This high is lower than this, lower than this, lower than this, and lower than this. Now this is important distinction here because it tells me that we have a bearish imbalance, which means the overall bias is bearish. And when I'm trading a bearish imbalance, there's a chance that the breakout of the trend range may work. Most breakouts will fail, at least temporarily, but once you see imbalances in ranges, that is a sign that the breakout may eventually work. So while I'm trading in a range like this and I'm monitoring the bearish imbalance, which is giving me a bearish bias overall, the price action is telling me everything. Also, you can see the 21 bar exponential moving average, the supportive indicator is flat, confirming the range structure. I have to keep drawing my shortened channels because I want to stay on the right side of the market while the channel is in play, because there's a trend line rule which says after there's a break of the channel, the traders expect to retest the latest extreme. So right now we have a downtrend working low with the break new low, reversed uptrend with the break and new extreme, and we have a second entry short. Now you can see that the price action is getting a little bit wedgy in the middle of the trend range, so there's really no way for me to enter, and price action is trading lower. Now we have what is a lower high setup, and lower high would confirm the second entry short, which had this lower high formed much closer to the EMA and much closer to the second entry short would have actually been decent setup, because you broke below EMA and the lower high would also be breakout pullback. But by the time we get lower high confirmation setup, it is way too far down. You'd be selling way down here, and that's just not really the high probability setup we're looking for, even though it is confirming the bearish imbalance, and price action keeps trending lower. Okay, so what I have to do, I'm going to redraw the shortened downtrend. You can see we are breaking the trend range, which means that the most breakouts will fail, at least temporarily. But I'm not fading the breakout. I'm not looking to go long. Due to the bearish imbalance, there's a chance that we may continue working lower. You can see it made the breakout pullback, quick little snip back to test the EMA and to test this breakout area. Prices broke lower, came back, tested it. You have a second entry short. But this second entry short, notice how far away from the EMA it is. It's not fully at the EMA. The uptrend didn't truly play out. There's a trend line rule even for the corrections inside of the main channels. So even though we expect new low for this downtrend, I can't really sell. Plus, we just broke out of the trend range. So this is pretty much no trade zone, too many conflicting patterns. So just be patient. The day is just starting, and I'm just observing what the price action is going to do. We're still far away from EMA. Right now we have a congestion. We're going sideways. Okay. So you can see we have small consolidation. We have 10 bars stacked right next to each other, which this phenomenon is a consolidation. And we finally made new extreme of this first channel. And you can also see it visually resembles the high probability setup we're looking for. First leg up, break, second leg up. So you have two leg up pullback. And we have new low, first entry short, second entry short. And also this is a micro fail breakout above this consolidation. So this right here is the second entry short and a fail breakout. But notice the signal bar is pure doji, and because we are above the EMA with no tangible key entry point just yet, it's way more advanced, way too aggressive. If you think you're going to continue trending lower, you're correct on the direction, but it's way more aggressive, and for this reason I'm not going to mark it. What is the setup you're expecting now? The setup would be, if you see push below EMA, which we are confirming, the lower high. Lower high would confirm the fail breakout, would confirm the second entry short, and overall bearish bias, because you can see the bearish imbalance is really kicking in. Lower high never formed, and thus we just need to sit here and watch price action trend lower. Okay, so at this point, since I'm getting the information from the market that the structure is not a trend range, I'm looking for bigger downtrend. So I'm going to draw downtrend like this. You can see geometric formations working lower. At first, I drew my channel a little bit flatter to cover more confirmations, the swings, but as prices kept trending lower, I widened it a little bit to make it a little bit steeper. I also am going to redraw a downtrend like this. And notice what is happening. We have a massive overshoot of this downtrend. So once you see this, this is indicating to you that the market is oversold, okay? And you don't need any indicator. You can just base that on the price action, what it's telling you. So the market is oversold. We're far away from EMA. And once I see overshoot like this, I generally expect stronger bullish momentum in the opposite direction. So once I see overshoot, I'm pausing my short setups. But notice prices keep trending lower and lower. Okay, so even this channel has a small break in extreme. And at this point, it got really confusing. Because after overshoot, you would expect stronger bullish momentum to the upside, but we kept pushing lower. So I was thinking, okay, let me see if there's a bigger downtrend, some steeper one. Maybe we have a steeper downtrend on our hands, but this is unlikely. But I was looking for something like this. But if I'm going to draw this, notice how ugly it looks and it doesn't fit at all. We have no swing confirmation, third swing, so much empty room here, so much empty room here, just doesn't fit that well. So there's pretty much no clear other channel for me than this one. And because market cannot continue working lower indefinitely, okay, you can see there's a push phase in the market, correction phase, push phase, correction phase, push phase, correction phase, and the push phase that is overextended. So the market works in phases, there's an equilibrium, and you have to stop the fear of missing out. And because you can see market moving lower, your common sense is telling you, okay, I need to keep selling because we've been trading lower for such a long time. And because your common sense doesn't know that the market works in push phase and correction phase cycle. So once you see this overshoot of the confirmed channel, and this channel fits really well, it really depicts price action well, you really have to not give in to your common sense, focus on what the price action is telling you. Remember, it is always better to be careful and patient than to be having losing trades. So what I'm going to do, I'm going to respect this overshoot because this is the best channel I have. And I'm going to pause looking to sell. At this point, what am I expecting? Stronger bullish momentum. We can either break the trend line or possibly reverse. Okay, so let's see what's going to happen. Okay, I have a new high, first entry long, pull back, second entry long, failure. Now, if there's going to be trigger below this bar, can I go short? I cannot. Not only we have 1, 2, 3, 4, 5, 6 bars stacked right next to each other, and this is a horrible congestion. EMA is exactly in the middle of these bars. This is overlapped area. No trade zone, just a first leg, so you may get second leg. And more importantly, we had an overshoot. And as we established, we expect stronger bullish bounce. We are pausing shorts. So nothing really is telling me and allowing me to take a short position here. And notice what we have. You actually have kind of like a micro first entry short, second entry short failure. So you have a failed second entry short. Now, this setup is way too aggressive, but I am going to mark it more aggressive because we have overshoot. We expect new high for this uptrend and we expect the second leg up. You know that a lot of sellers must have gotten trapped here, selling way too late after the downtrend played out. Okay, so this is more gut feeling based trade, but it's such a nice signal bar. Because of the overshoot, you can really trap a lot of sellers selling here. So I'm willing to mark it more aggressive. And market continues working higher, and this is right now confirming our overshoot thesis. I'm going to redraw even wider channel because at this point I just expect stronger bullish momentum. Okay, we have a new high, first entry long, pull back. Actually, there's micro double top, so I reset the count. We have a new high, first entry long, second entry long, but there was never a trigger. If there was a trigger, do you want to take it? You can't really take it regardless because you have this micro downtrend working lower, but there was no trigger above this bullish bar. Okay, so there was no second entry long. New high, there's a break above this bar indicating first entry long. You can see there's a break here above this bar, but there is no break above this bullish pin bar. So there is no second entry long. Market keeps going sideways. Okay, and notice what we have now. We have a new high, first entry long, second entry long, which I cannot take, but I'm going to mark it. And you can see this is how price action moves. The price action moves in these either visual two-legged pullbacks or micro two-legged pullbacks, and we're accounting for the second entry because if it forms under the right context at the right key entry point, it's going to be high probability setup. So I have a second entry long, and notice now we have a failed second entry long from seller's perspective, but it's above the EMA. This uptrend needs to get new high. We have overshoot, so we have stronger bullish bias. And notice what we have. This is a great bearish trap because the push above EMA solidified our idea that this channel is valid. It is a great tier 1 signal bar right at the EMA, the risk is small and it's confirming new high, first entry long, second entry long, and you need new high after overshoot. So this is a great high probability setup, high low confirmation setup of the second entry long. I actually do this setup myself. So this may feel a little bit uneasy to go long here given that we traded down, but this is really what overshoots can do. And because you pushed above EMA, this pretty much is confirming that the bullish bias is kicking in, but we keep working higher, and this is how you handle the overshoot and the stronger bullish momentum. Okay, so we have a new high for the uptrend at this point. Now I can start thinking about possible felt second entry long below EMA. Yeah, new high, first entry long. But the felt second entry long is not forming. It pushed above EMA. It is a horrible bar. You can't sell below this, and downtrend already has a breaking new extreme. Now, why am I thinking about selling now? Well, because we traded down and now we have a breaking new high, and it looks like first leg here and the second leg here. Okay, so it's a little bit unclear here, but if the felt second entry long formed really well, I would have considered, but I can see that it is not forming well. We never triggered above this bull bar, and the signal bar has this is almost a bullish bar, not a good bullish bar, but this is almost a bullish bar, just a couple ticks higher, so you can definitely sell. And you have small breaking low, so I'm just going to be patient. Okay, you small breaking low and you're going sideways, so I cannot touch anything. In fact, this is telling you, okay, the market is bottoming again. We may actually keep working higher, and we're pushing above EMA. Okay, so this is right now, once again, confirming the bullish bias, similarly to what is happening here. And this is once again confirming the overshoot. Okay, we're most likely truly going to break the trend line given the overshoot. So I was even looking for possible wider channel, something like this. And this is how I have to adapt when I'm watching the overshoot. You can see how the market is bottoming out here. It's going more sideways after the breaking low, and the market is pushing higher. And notice you have new low, first entry short, pullback, second entry short, failure. If there's going to be a trigger above this bar, which is almost to be a good bullish bar, reversal bar, had it close one tick higher with the bullish body. Look at the tail, it looked very bearish. At the end of the bar, at the close, it reversed strong bullish. So this is a felt second entry short. We're back above the EMA, and this is a great high probability setup. I wasn't so sure here when I was watching this live. I should have taken this. I just didn't react quickly, and I didn't change my mind quickly. But this is a great felt second entry short because you're back above EMA, almost identical setup to here, basically price action wise. And market keeps trending higher, keeps trending higher. I don't think you can take any long, just first entry long. Okay, I'm going to redraw a short and downtrend like this. Now I was really considering felt second entry long, but notice new high, first entry long, second entry long failure. The felt second entry long has a horrible bar, so this preventing me from considering this setup to take it because it is neutral doji and we have basically multiple ugly bars stacked right next to each other. Had I had better bar, I would have shorted, but with this doji, I waited, especially if we have overshoot. And good thing I did because it reversed on you like this. So if you took it, you're taking a chance because this is not a clear bias, definitely not a good bias to sell. So you really need to have a good signal bar when you have too many conflicting patterns. This is not like strong downtrend or anything, but you can see the doji, not really good bar to sell below. Okay, I don't want to sell just yet because of the overshoot. I want to see push below EMA and felt second entry long if I'm thinking about selling. If there was no overshoot, this was regular downtrend, and you can see how long this bullish correction is. This is almost starting to be a valid uptrend on its own. So if it was just a regular downtrend with small bullish pullbacks, you can sell key entry point, not today. The market keeps trending higher. At this point, I was still thinking, okay, we may get new low for the downtrend, but notice what is happening. Prices rallied up higher and never looked back. Completely reversed the market. So I'm going to redraw the uptrend. The whole time you're expecting second entry long at the EMA, but that's not forming at all. You just have a bunch of first entry longs far away from EMA working higher, so we can't really enter. And at this point, when I'm going to zoom back, it's pretty obvious. We have a brand new uptrend working higher, and this can happen sometimes. Overshoot, it can lead to reversal. Generally, it will just break the channel, it will create measured break on the other side, and the new low will be tested. But there are instances where the market will get straight reversal, and this is exactly today's scenario because you can see how far you retraced too much of this downtrend. So according to price action rules, we have a brand new uptrend trending higher. We have a small break new high, so I cannot go long. Oops. Okay, I have a small consolidation once again. So this is telling you that the market is in indecision. You have a break lower, which is a failed breakout out of this consolidation, which most breakouts according to price action rules out of trend ranges will fail. And this is nothing more, nothing less, just a variation of a trend range, a small one. But because we just have a small break new high, you know, it feels a little bit aggressive. You would need high low. If you get high low here, which would also be second entry long, new high first entry long, second entry long, there would be good confirmation of the failed breakout and of the bullish bias. But notice the high low confirmation setup has bearish bar and double bar entry is too far up because you prefer the follow-up bullish bar be much closer to the high of the signal bar, and there is just too much of a gap. The risk is too big. Unfortunately, it doesn't form well. But if you have better bullish bar here, you can definitely go long. Second entry long high low, confirming failed breakout, and the structure right now is bullish channel. Okay, prices keep working higher. So what I'm going to do, I'm going to zoom back again, and I'm going to draw this wider uptrend. Now it's not that easy for me to find whether we have another overshoot or not, because this is too much price action. I can also have tiny overshoot here, or I can put a little bit higher. Since I have no swings here that allow me to put the channel in place, it's not that easy for me to find if it's overshoot or not. I have more confirmations here, so that's the first clue that this may be overshoot, but this is so close borderline. You can also may well draw it like this. So, you know, there are both ways how you can approach this, because this is quite hard when you're watching this live. What you have to do, you're going to watch how the price action is going to correct. Okay, you have a new high, first entry long, second entry long feather. You cannot take below bullish bar. There was no trigger below bearish bar. Then you have new low, second entry short, and you may have even a wider downtrend in play, but the second entry short is above EMA. You know, this uptrend is a break new high, yes, but you know, this is still quite a little bit early. You have to be very advanced to know what's going on here. If you understand what's going on here, then great, but this is way too advanced. Okay, market is trending lower. Okay, and we keep trending higher. Okay, so at this point, the EMA is flattening. I have a lot of price swings up and down, so I'm going to redraw a trend range because we are entering consolidation. We are breaking back above EMA, so I'm considering second entry long because the main trend may come into play. But we're pushing back below EMA and we are back below the exponential moving average. Now notice, this downtrend created new low, which is telling me that the bearish correction played out, and I can start thinking about buying again if I have a push above EMA, which is confirming the bullish bias, and if I have a failed second entry short above the exponential moving average. Okay, so you have a new low, first entry short. Now we have high low. Once again, new high. Actually, we have a first entry long here, second entry long here. There was a micro tick higher here. So this high low is confirming second entry long. I was about to take it headed close above EMA, but it still stayed below EMA, which is not something you want to see when you're thinking about possible overshoot or not. I really wanted to see push above EMA, which never formed. There was no failed second entry short. Okay, you can see how prices are slowly working lower. You know, I don't want to buy blindly, even though it may work for a scalp. You really want to see the push above EMA and a failed second entry short, which never formed. And now finally the market is breaking higher. There was a new low, first entry short, second entry short, failure. But as you can see, the signal bar was a very horrible bar and it couldn't have been entered. And now it's way too late. Profit taking, and market is actually trending lower. So when I'm watching back the price action, it actually looks like this ended up being overshoot as well, which you can see. You have a couple of swings here that these were the ones you would draw when you were watching this live, and this is quite a depletion overshoot, and for this reason we had stronger bearish momentum. You can see how prices are struggling to break above the EMA. That's never a good sign, and you really want to see the push above EMA to confirm it and get a failed second entry short. You can buy a couple of these lows to work for a scalp, but it's just way too aggressive. So not that many setups, but it was a decent day overall. You can see how sometimes overshoots can be tricky. And remember, market cannot go down and up indefinitely. There just needs to be a push phase and needs to be correction phase. There are always pullbacks during every single trend. And if you can see the move going higher or lower without correcting, that's most likely oversold, overbought territory. That's going to lead to overshoot, and you can expect stronger momentum in opposite direction. So I hope you had a decent trading day, and good luck with your trading.